Good morning and welcome to Missoula Real Estate Today. This is Denny Bedard. Missoula Real Estate Today is presented by Diane Beck of Windermere Real Estate. Diane's been working with buyers and sellers in the Missoula market for over 25 years and shares her insights on the local housing market. Along with her trusted partners, Diane provides complete service for your real estate transaction and brings us guests who provide useful information on industry-related topics and trends. And now, Missoula Real Estate Today on News Talk, KGVO. Welcome, as always, to Missoula Real Estate Today. Nice to have you with us this weekend, presented by Diane Beck of Windermere Real Estate, who always sends us some fantastic guests to be on the program. Why do we have an accountant guy on the real estate show? Well, we'll find out. Gordon Campbell, Campbell and Associates, certified public accountants here in Missoula. A very important deadline coming up on July 17th. That is the main reason Gordon's here. We'll talk about that shortly. But welcome, I guess I say welcome back to the show. You've been on a time or two, right?
Thank you, Denny. Yes, I've been here a time or two.
All right. How long have you been a CPA, and what led you to that career?
You know, I've been a CPA since 1980, and I think it's because I wasn't good at anything else. I've kind of always been, I've kind of had a brain for numbers. I'm a numbers guy.
You're a numbers guy.
So,
well, yeah.
It kind of just has been easy for me and fits with my mentality.
All right. Yeah. What's the best advice you can give someone who thinks they can do their own taxes these days?
Well, and it probably is possible to do your own taxes if you have a very simple situation. I always say that I don't think a software program is going to replace a brain of a human being that can think and can strategize and can, take all the information and make sense of it and go down this path versus that path. It's a little bit more complicated than that, and I see that all the time. We run into people that do their tax return on TurboTax, and again, if it's very, very simple, yeah, it might work good. If it's complicated, it might not work so good.
I would guess that it doesn't take a lot to make it complicated, though, right?
Well, the tax code is, many, many pages. The new Tax Act that we're going to talk about a little bit today, I think, was 570 pages. So that's a lot of pages.
In all the years you've been doing this, have there been any, periods or years where changes in tax laws have just been like this tsunami that you had to deal with, or is it more steady and consistent, albeit ever changing?
Well, the normal year is there's not massive change in a normal year. There has been a couple of times. 1986 was a massive year. That was during the Reagan years, and we had massive changes in 1986. That's when passive losses came into effect and lots and lots of other things. But this most recent tax change that went into effect in 18, that is the biggest change since 1986. And I have read some people say it's the biggest change since 1913, which was the year the income tax came into effect in the United States. So bigger than, it's the biggest thing ever, right?
Yeah. I kind of joked a minute ago about the best advice you can give someone thinking they can do their own taxes. And you talked about this just a little tiny bit, but what are some of the most common mistakes individuals make when they do it themselves and end up coming to Campbell and Associates anyway?
Well, probably the biggest thing is they put numbers in the wrong place. They don't have a concept of, this is this kind of income and it needs to go here. I had a person one time that is a sole proprietor and happened to be in the real estate business and did her tax return, and answered the questions of TurboTax, but she put all of her gross revenue on one line and she put all of her expenses on another line, and they were the wrong lines, and she ended up owing $22,000 in tax that year. We filed amended tax returns for her, and she owed like $1,000. So, the difference was $21,000. Needless to say, she thinks we're geniuses, even though we just know what we're doing, right? It made a big difference in her case.
Yeah, you're $21,000 geniuses. Yeah. That is pretty impressive. I think everybody just assumes, Gordon, that I should say that my guest on Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate, is Gordon Campbell, Campbell and Associates, certified public accountants here in Missoula. And I think everyone, Gordon, just kind of assumes that filing taxes and dealing with various laws make it harder each and every year. Is that accurate? If so, why? If not, why not?
I think as time goes on, there are more laws. Congress is pretty good at passing more and more rules and more laws. People in the past have talked about a flat tax, and I don't think that's ever going to happen. I think there's too much power in playing with the tax code by Congress. They do lots and lots of things that have nothing to do with raising revenue. They affect social issues, right? They want houses to be more efficient, so they give an energy credit if you insulate your house. So, they have power, and I don't think Congress is going to give up that power. So that's a tool that they use for other than raising revenue. They use it for social issues.
So if it can't be flat if you keep wrinkling it, I guess.
That sounds true.
Well, let's get to the main reason that you are here. That's why we have a CPA on the Real Estate Show this week. Real estate property assessments, big day, July 17th. How is what's going to happen to home and property owners here in the next 30-plus days?
Well, so the Department of Revenue sent out, I think, on June 18th, or close to that date, a property assessment to every single real estate property owner in the state of Montana. And they have revalued the fair market value of their property, and they've noted that on a form. It's called the 2019 Classification and Appraisal Notice, and it tells you the old value and it tells you the new value. And the date-sensitive part of this, Denny, is that number, if you don't do anything to appeal that number, that will be the number, and it will be the amount that your real estate tax bill that comes out in November will be based on. So, for example, I have a copy of a client that had that. And
share that, because there seems to be some just bizarre disparity from one year to the next.
Well, in this person's case, they own a little property, and it was the previously assessed value was $189,000. The current assessed value is $318,000. Well, that's a $129,000 increase in one period, which represents a 68% increase. When I saw that, I thought, what's going on? Did that property really go up in value 68% since the last time the property value appraisal came out? And I just think that's high. So in that case, the deadline part of this is you have 30 days from the date that you get your appraisal assessment notice, which was June 18th, and so 30 days is July 17th. Make that determination. Is it a smart idea for me to appeal my appraisal notice, and have a discussion with the Department of Revenue and say, is it right? Does this increase seem appropriate? Is the information about my property right? Every single property in the state of Montana gets appraised every 2 years. And so that's a lot of work. That's a lot of touching of numbers. And, Department of Revenue doesn't have sometimes all the right information. You need to check your square footage. You need to check that, they have a statement on the appraisal form that says, it's average quality, it's good quality, it's excellent quality, which affects the value. So, you just need to make sure all the information is correct. And by filing the form to appeal, and that form is called AB-26, that starts the process to be contacted by the Department of Revenue to have that discussion and say, let's informally talk about it first, and then they will either reduce your value or say they're not going to reduce your value. If you still don't like that, you can appeal it to the County Tax Appeal Board, which is a local board that you can go in front of and can have that argument, and a local board of, I think, 3 people make a determination and say yay or nay. And if you still don't like that, you can go to the State Tax Appeal Board. So I think the informal process is having a discussion. I've called the Department of Revenue locally, and the people there are really nice. They're willing to talk about it and explain things. And sometimes, even if the number is right, at least you know why it's right. You know what the methodology was and why they came up with what they came up with.
But why such a drastic disparity? That example you just gave, that's not an isolated incident. We have talked about this on our weekday talk program, Talkback, here on KGVO. And this person here, this individual that you gave the example to, is not alone. How probably a naive way to ask this question. How does that happen?
Well, I have been told that a big reason for that is that the Department of Revenue came up with a computerized mathematical calculation, and it's mostly because of the land. So they have changed the way they value the land, and they have valued land and it's a little bit complicated, but it starts out saying, hey, the first 7,800 square feet of property gets valued at a rate of $56.79 a square foot. Well,
regardless of anything else, that's just it?
I think that's the case.
Okay.
I think it depends on what part of town you're in. Certain locations are high profile.
So it could fluctuate a little bit, but that's primarily the
standard. So that number sounds kind of high to me, right? $56.
Sure.
But they say that it's based upon recent sales, and we all know that there's a lot of construction going on, a lot of new commercial projects going on in Missoula. So I don't doubt that the values are up, but I think on a case-by-case basis, the question becomes, is that methodology, is it valid for my property? It might be valid for the new bank that just built a $30 million bank down the road, but is it valid for my property? So that's the thing would like to discuss with the Department of Revenue when I appeal this particular client's situation.
Do you anticipate a lot of appeals?
You know what? I think that depends on if people are aware of their ability to appeal. Sometimes you get stuff in the mail from government agencies, and it's easy not to read every last sentence and miss these deadlines. And, of course, that's one of the reasons we're talking about this today. If we want to get the word out that if you believe that it might be a good idea for you to appeal your assessed value, you must do it and file this Form AB 26 by July 17th. So, I think there will be a lot. I plan on doing a few myself just because I have a few properties and clients that think that the number's high.
This is Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate, and our special guest is Gordon Campbell and Associates Certified Public Accountants, and we're talking about the real estate property assessments that you property owners need to address. July 17th, a big day. This is more of an observation, I guess, Gordon, but when you were talking about the appeal process, that it's almost, and maybe this is very common, that when you have to deal with multi-tiered government agencies, but it almost sounds like, well, okay, you make this appeal. If that's you may get rejected there, so you make this appeal. It gives that sound of attempting to wear you down a little bit to the point where you got to go, heck with it. But when this much money is on the line, that's probably not what's going to happen. But it just seems like going to make you work pretty hard to win your case.
Well, and at least the good thing about having multiple chances to appeal and processes is that it's not one and done. It's not, well, we're a government agency, we make a decision and there's no appealing it. That's kind of the informal process that you go through, and if you don't like that outcome, you can go to the next process. So it's nice that there are, additional choices from a taxpayer's point of view to just say, well, I just don't have to accept your opinion as gospel, and I have no choices other than to acquiesce, right? At least there's a process that we can go through to maybe, get to the right answer at the end.
Is that assessment saying that you could get this amount if you wanted to? And by that, I mean, you use an example where, okay, the last time your property assessment, your value was, let's say, $175,000. Now it comes in at $300,000, a drastic $125,000 increase. But I would think somebody with that property would say, there is no way in heck that if I wanted to sell this, I would ever get anywhere near $300,000 for it. But is that what that assessment is saying? That if you wanted to make a sale, that it would probably be in this neighborhood?
Yes, it's exactly what it's saying.
Wow.
Because it's supposed to be fair market value as determined by the Department of Revenue. And again, it's a computerized program that kind of, is general. Anytime you use a computerized program to across the board try to value every single property. Well, every single property is different in some way, right? Some are in great shape, some are in poor shape, some are in a better location. I mean, there's so many variables that it's kind of hard for a computer program to just automatically spit out an exact number, right? So that's one of the reasons that I think in this case is that this particular property, it's kind of a odd pie-shaped place. It has trouble with parking. It has trouble with sidewalks. There's issues related to this property. It's not like a brand new, big piece of property that has no problem with anything, with parking, with sidewalks, all that kind of stuff. So, but you're right. It is that number is supposed to be the fair market value, and the fair market value is what a willing buyer and a willing seller would exchange at.
Does this, in your mind, come at a odd time? I'm talking about the deadline. We're talking about July 17th and whatnot. I don't know that very many people are in the mindset of tax issues this time of year. Yeah, April 15th and all of this and that, and then late in the year you've got some assessments to deal with. But does the deadline come at an odd time, right in the heart of summer and summer vacations and all of that?
Well, I guess it does when you think of it like that, Denny. But again, the assessment comes out, and then a taxpayer has 30 days in which to appeal that if they don't agree with it. So, I guess it is what it is, right?
Yeah, sure.
It's you have that 30 days, and you have the 30 days from the date you get that assessment. That letter has a date on it, and all the ones I've seen say June 18th. So that's kind of an oddball date. What's significant about that? But the assessments normally do come out this time of year. And in the past, one of the good things about the assessment that I'm glad the Department of Revenue did this year is on that assessment, they are telling the taxpayer what they have estimated their 2019 taxes will be. In the past, that number really wasn't there. So they got an assessment and said, my property went from X to X, but it really wasn't dollarized. Well, what does that mean? Well, now it's kind of dollarized. It says, in this person's case, the taxes are going from roughly $3,500 to roughly $5,600. So, that's a number that people can understand and say, I understand that number. That's a number I'm going to have to pay in November, right? It means something to me now. So I'm glad they put that estimated amount on there. But again, the 30-day time period is what we just want to get the word out and say, if you're a real estate owner, look at your assessment that you received, give it a look-see, and if it appears reasonable and it seems valid, then there's nothing you need to do. But if it seems excessive, then think about sending in this AB 26 and beginning that process to talk about the value with the Department of Revenue.
Okay. I guess it seems excessive is subject to personal opinion, isn't it?
Yeah, I think it might be.
Gordon Campbell and Associates, Certified Public Accountants, our guest this week on Missoula Real Estate Today, presented by Diane Beck of Windermere Real Estate. Gordon, let's go through the form that people received a little bit. Its numerical name and how complicated is it and all of that.
Well, I don't think it has a numerical name. At the top of it, it says 2019 Classification and Appraisal Notice from Missoula County. Each county has the county on it, and it has the owner at the top. It has the assessment code, and then it has the breakdown of the value, the previous assessed value for land, the previous assessed value for building, the total, and then it gives you the current assessed value for land and building. And then over on the far right, it gives you that number I talked about previously, estimated general taxes, which is a number that, again, means something. I know what I paid in taxes last year. This is what I'm going to have to pay this year. And is that a number that I can live with, for starters, right? Is it a number that makes sense to me? So, and then the balance of the form tells you that, you've got this 30 days. The form, that AB 26 form, is not attached to that. So you can go on the internet and Google AB 26 Montana form, and it'll pop up, and you can look at it. That form, just when you fill out that form is called Request for Classification and Appraisal Review. So that's that informal process of having a discussion with the Department of Revenue and talking.
Why would they make you go look for that form? Why would you not just attach that form with the assessment notice? Paperwork expense.
And I guess
maybe they're thinking not that many people are going to appeal.
Yeah, not everybody appeals. So as a percent, I'll bet the number of people that appeal is probably statewide quite low. So And again, it is available on the internet, so it's
okay.
fairly easy to.
So you have
to
to
find.
fetch that though if you want to.
Yes, you do. Yeah, and it's a 6-page form, and
Okay.
and then that includes instructions. And so on that form, you put your name, you put your details, and then there's a key part. It says, request for an informal classification. Please be specific. Attach a separate page if needed. My request for an informal review is based on the following facts. And so they're saying, well, gee, why if you don't think the number's right, why don't you think the number's right? And I think that can be a general statement. What I put on this particular one is that I thought, well, a 68% increase seemed unrealistically high. I doubt if fair market value increased that percent in one single time period. And then I mentioned in this that I wanted to review the details of the property, the condition, the square feet, the issues with parking, the issues with availability of sidewalk, that kind of thing. On that form, there's a form a little farther back that says you can request what they call a residential or commercial information packet, which is all the information they have on your property, and they'll actually just email it to you.
Okay.
And then you have everything that they know about your property.
You,
and that's
you would almost have to have that, would you not, to see what they're – because in my mind, okay, it's apples to oranges here, so I need to see your apples or your oranges so I can compare them to mine.
And that's true, and I think that's the part of this process of making sure that the information they're basing their appraisal numbers is accurate. First off, you've got the right size lot size. Oh, you've got the right size for the building. Oh, there's a upstairs, there's a downstairs. It's top quality, it's poor quality. I mean, all that information is in that packet. So we automatically request that. So we just have as much information in front of us to make a determination and have all the facts available, right?
Okay.
Yep.
All right. Hey, a special thank you to some of Diane's marketing partners that helped bring you Missoula Real Estate today. Rob Fleming with Mann Mortgage, Miles Link of Opportunity Bank of Montana, and Carol Blodgett from MakeItMissoula.com. And our guest this week is Gordon Campbell with Campbell and Associates, Certified Public Accountants. I can't believe, Gordon, we're down to just a final few minutes, but done a great job of going over the forms and deadlines and what to anticipate when you see them. But a couple of other things I'd like to jump to in the final few minutes here. One is a term being used called opportunity zones, its meanings and its benefits.
So the opportunity zone opportunity came into effect with the Tax Cut and Job Act, that came into effect 1/1 of 18. So in a nutshell, and it's a little bit complicated, so this is kind of a boiled-down version of it, every city or every community has what's called an opportunity zone. It's normally an area that's a little bit blighted, a little bit down economically. In Missoula, that is roughly, you can go on and you can Google that term and it'll show you a map and it'll tell you where it is in Missoula. But it's roughly north of Broadway from roughly Russell to Costco, in general. It's kind of that part of town. And so the idea is that if you're a person that has a capital gain from anything, from the sale of a stock, from the sale of a fourplex, from the sale of a business, if you take that gain that you have and invest it in an opportunity zone in real estate or a business, it could be, you're starting a forklift factory and you're going to start building forklifts, or you're going to start a high-tech company, and you're going to start trying to sell apps to Apple. It can be anything. And so if you do that, then that capital gain that normally you have to pay tax on this year, you can defer that tax to the year 2026. Well, that's a significant number of years did not pay tax. And in 2026, you have to then pay the tax. And if you've held the property, if you've held this new investment for 5 years, you get a 10% reduction of the tax, 7 years, a 15% reduction. And then the other piece of that is, so not only do we have this deferral of not having to pay tax for quite a few years, the other part of this is that, okay, if you jump through the hoops of having a valid investment in an opportunity zone, you can not, and you hold it 10 years ultimately, and let's say you had a $500,000 gain, you stuck that $500,000 in this investment, and then you grew it to $5 million. That increase from $500,000 to $5 million, and you sold it for $5 million, would not be taxed at all. That's a holding period of 10 years. So, if for the right person, that could be a giant thing, right? If I was a guy who was going to start an app, and if I was smart enough to start an app, I would want to do it in opportunity zone if I had a capital gain. And there's people around the country that are putting together, they call them opportunity funds, and there'll be, brokers that find the guys with the gains, they find the guys with the good ideas, they find the guys that are the real estate people, and they create these opportunity funds. And in the right situation, it can make a lot of sense. So my only point in talking about that is just, if you are a person that has a fairly substantial gain, consider or be aware of this opportunity funds and these opportunity zones, because it's worth checking out.
All right. Also, another term that you wanted to introduce us to just a little bit. I'm sure some people are familiar with this, but it's called a value-added tax. How does that differ? It doesn't, it's not in place, but if it were, how does it differ from a sales tax or a luxury tax?
Well, it's very similar to a national sales tax. Okay. So a value-added tax is a tax that governments will collect from the sales of any product. So for any of us that have been to Canada, when you go to Canada, you pay the GST tax. That's called Goods and Services Tax. That is, in essence, a value-added tax. You buy something for $100 and you actually pay $110 or whatever the rate is, right? And so that money just gets collected by the business on the value of the transaction. They pay it in to the government. So the reason that we're even thinking about this value-added tax question is that earlier I mentioned to Denny, I was at a class, and there was a expert CPA from Chicago who said, and I'd never heard this before, he said, "Mark my words, the value-added tax is coming because it's the only way that the federal government can ever hope to pay off the $22 trillion in debt we have and get our debt paid down." And that was, of course, this is just one man's opinion.
Exactly.
And I went back to my office after hearing that, and I thought, well, gee, I wonder how many countries have that. So there's 195 countries at any day, roughly, in the world, and I Googled how many have a value-added tax. 140 of the 195 countries that exist have it. So it's something that's out there in the world. It is used by most countries. We don't. In the United States, we've never had a value-added tax, but this one person's opinion was, mark my words, the value-added tax is coming. So I guess it's just worthwhile to be aware of that possibility, to know what it means, and if Congress ever brings it up, to have some knowledge of what does it mean. And you know what? Interestingly enough, I Googled what the average value-added tax rate is of all countries. Mm-hmm. That rate was 22%. So that means if you bought a car for $100,000, it would actually cost $12,000 too. I mean, and of course, It would be up to Congress to determine what the rate is, but it's a significant thing. So just be aware of it when you hear your congressman talking about it. Know what it means is my only point there.
Well, interesting and, of course, timely stuff with that July 17th deadline. I really appreciate you coming in kind of last-minute notice to get you in here prior to that deadline. We appreciate it, but somebody listening to this program and think, man, I need that dude to be my tax guy. Tell us about Campbell and Associates, how we contact you, and all of that information.
Well, we're a firm of 10 people, and we have, I think, 4 CPAs, and most of our people have been with us for 20, 25, 30 years. And so we don't have a lot of turnover. We're a good group of people.
Yeah.
We advocate for our clients. We do our best to do a good job. And we're located at 2505 South Russell, right across from the fairgrounds. And,
sure.
We've been around since 1980, so we've been in Missoula for a while.
Gordon Campbell with Campbell and Associates, certified public accountants. Thanks for coming on Missoula Real Estate today. Nice meeting you.
Yeah, it was nice talking with you, Denny. Appreciate it.
Thank you for listening to Missoula Real Estate Today. If you have any suggested topics for any future Missoula Real Estate Today programs, or any questions about buying or selling, contact Diane Beck with Windermere Real Estate. Email dianebeck@realtor.com. or visit her website, homesinmissoula.com. That's homesinmissoula.com. We'll see you next time on Missoula Real Estate Today.